Indian equity markets saw significant weakness last week, with the Nifty 50 and Sensex plunging around 2.5%. The broader indices were hit harder, with midcap and smallcap indices dropping over 5%. This slump came as global and domestic factors weighed heavily on investor sentiment. In fact, a downward revision in India's full-year GDP growth estimates, rising oil prices, and persistent selling by foreign institutional investors created headwinds. Additionally, rising U.S. bond yields and a strengthening U.S. dollar index added to the pressure. Looking ahead, corporate earnings will take center stage, with major Indian companies like Reliance Industries, Infosys, Kotak Mahindra Bank set to announce their Q3 FY25 results this week. These earnings will provide critical insight into how companies are navigating inflation and demand challenges. On the macroeconomic front, December's inflation data for India and the US will play a key role in shaping investor expectations ahead of the Reserve Bank of India's February policy meeting. Economists, in fact, expect India's inflation to have eased further, while US data could signal a pause in the Federal Reserve's interest rate cuts. Oil prices, which surged nearly 4.3% last week due to tighter sanctions on Russian crude and stronger Chinese demand, remain a critical factor for Indian markets, given their inflationary impact. With the Union Budget 2025 approaching on February 1, markets are likely to remain volatile as investors gauge potential reforms and fiscal policies. Overall, a mix of earnings, global cues, macroeconomic data will keep the market on edge in the coming weeks. And with us on the broadcast this minute is market expert Ajay Bagga. Thanks very much for being here. Let me begin by asking you, for your reaction on how the Sensex crashed over 1,000 points, reflecting a broader pullback basically in the global stocks.
Can you hear me?
Yes, absolutely. If my voice is going through to you now, if you can just share your reaction, first of all, to the Sensex crashing over 1,000 points, which obviously does reflect a broader pullback in the global stocks as well.